I am recording. Cool. Okay. What's up, everybody? Welcome to Orb Plus. I know I haven't recorded very often this week. I've only recorded once, and it was a losing trade. I learned my mistake, and from this trade right here, I wanted to really get into saving my money rather than losing it. And as you can see, Tuesday wasn't a good trade. Wednesday just did not line up at all. We didn't see any real movement in this until it dropped. And I wanted to come back and evaluate this on Thursday. Thursday we consolidated, and by the time I had woke up Thursday, we were already over here, and it was already super choppy. This just was not a good trade to take for me, in my opinion. So I chose not to do anything. This was Thursday's price action. Today is Friday. Looks like we're doing more of the same. We're consolidating. We'll go ahead and set it up just to see what exactly is going to happen. I don't think we're going to be taking a trade today, simply because, one, we're consolidating. This is a straight line. There's not up movement. There's not down movement. There was a little bit of up movement in this. That was at the end of Thursday, the New York Stock Exchange. That was legit that was 8 all the way to, yeah, 14. So if we had taken a trade today, it wouldn't have been a decent trade. We would not have made a lot at all. We would have more than likely been stopped out by spread if we had taken a trade Thursday. So, just so we're on the same page, I've been sticking to my trading strat, right? If the trade looks good, I can get a daily bias. If I can identify my blocks that are needed in order to take a valid, worthwhile trade, I'm going to take it. I am. Wednesday, we had news. This right here, we had a little bit of news. That's what this huge move down was. Thursday, we had a lot of news. A lot. It was just a bad trade day altogether. So this was a valid, don't go near this day. Today, we have one orange folder. New home sales. Aside from that, we have nothing else in terms of folders. Asian session high, highest point Asian session got to was right here. Lowest point Asian session got to was here. Highest point London session got to, and lowest point London session got to. As of right now, this right here is our price movement. Woo. We know it's consolidating. Daily bias says, I don't know where it wants to go. That's the most recent high out of it. That's the most recent low out of it. We're looking at this price range, and we're looking at this. I think it wants to go lower. We've dropped down just a little bit. I actually just got through watching an 8-minute video on yesterday's trade action stuff, right? TJR, right? My mentor. We're trying to figure this out, right? I watched a little 8-minute video and was trying to figure out what he was doing all week, right? I wanted to see exactly if what I did was right or what if I did was wrong. And what I learned was it was neither, because he was taking trades the entire time, which is cool. It is. He had some pretty good lessons in there. I should have been paying attention to his channel throughout this week because, ouch, one. And then two, we lost on the 1 day by spread, which was another ouch on my part. Okay? Realistically speaking, that was an ouch. Realistically speaking as well, we should have been able to take a trade Wednesday. I was dumb enough to sleep past every single one of my alarms that went off. That's just me. Like, I really need to get in the habit of waking up early to catch these trades because, man, am I missing out. And we've only got one more week of this month to really take a trade on. And I've got to make back all of this money here and then some for 3 months of profitability. All 3 months I've got to have green in the bank right here. So today we're looking to take a trade. Today we're using our eyes, knowledge, know-how to take a trade effectively to win it. If we cannot see a trade to enter on, we're staying out of the market. $50, $10.30. This is the prime time to take a trade. This is the one time to stay away from trade. Plain and simple. We'll go for the hourly. Do I see any key levels that we could get hit that we could target? Yeah, I do actually. We have a fair value gap right here that is currently being respected. We have a green candle right here. So far, it's only been wicked past, which is cool. It's fine. We also have a fair value gap up here, though I feel we need to pay attention to this. Let's see, so none there, none there. That's not a fair value gap. Nope. So this is our valid fair value gap currently. This has not been inverted as well. We're looking for it to get inverted. We had a huge drop down here, which means all the take profit from here to up here. This is a key level range we could look at to actually get hit. I find this kind of funny because that is like dead set. Like, we marked this area here and we didn't watch this, we didn't see this, we didn't record this, but we observed up into like this candle here, the move up before it crashed on down. And I wanted to come back to this. I am coming back to this. What exactly happened here? Why exactly did we not take a trade here? Because this looks like it should have been prime time to go. One, if we looked at our key levels, right, we had, this is our 8 o'clock. No. This is London session. All through this is London session. We legit consolidated. We stayed within price range. 8 o'clock came around. We go down to the 5-minute, right? Go down to the 5-minute. 8 o'clock is right here. We come around to this, and we don't see any key level hit right up until 9:50. 9:50 is the first time we see key level hit, and it, on the hourly, we don't really see it hit until 10, which kind of bites us in the butt because that gives us so little time to figure out if we're going to take a trade or not. Because 10:30 comes around and we are out of the market. We don't take a trade. It's not worth it to lose a trade thinking it's going to go one way or another. And the daily bias was that it was going down. We were in a downtrend, so yay. But we broke structure out of that downtrend, right? So the assumption off of this break of structure would have been prices moving higher. And sure, it did. It did. Right up until it crashed through the floor. Which meant this right here would have been a very bad indication for us. Yes, it would have gone higher. We would have been messed up. We would not have hit take profit. And we would have been stopped out. Double-edged no. I'm going to back up right quick, though. I'm going to explain it as I saw it when we got here. Okay? So again, right here at 10, we saw it break out of this consolidation pattern. This huge green block here, this was the high and low of Asian session and London session. Sorry, this is London session right here. This is Asian session over here. Of London session and New York session, right? Because we consolidated for the majority of them right up until 10. 10, we saw a breakout. From there, we saw, okay, we need to identify our building blocks. That would be break of structure, inverse value gap, or an SMT divergence. We didn't check for SMT divergence at first. We wanted to look for a break of structure or an inverse value gap because that's what we were looking for. That's how we determine stuff. Well, I have gotten into the habit of understanding and realizing that it's only after the key level hits that we need to be looking for those building blocks, because everything beforehand was the setup for that building block to hit the key level that we were wanting. So, from the key level onward, it was what we were looking for. We would have been needing to look for a break of structure or an inverse value gap. We didn't see our break of structure until 10:25, 5 minutes before we were out of market. We waited entirely too long. We did not get a inverse value gap anywhere in this. We only had this break of structure to work off of. From this, we'd have been still on the 5 minute looking for a fair value gap, right? Our fair value gap happened here. This is now 10:55. 25 minutes after we should have been out of market. We didn't stick around. We stopped recording. We said, okay, it's not giving us a good trade. We're not going to take it. Not worth it. We saw this here and said, no, we see it now, right? We see this fair value gap. If we had gone from this fair value gap onward, we would have needed to look for a break of structure. So from this fair value gap, we would have needed to look for the break of structure of this high here to determine that price is going to go higher on the 1 minute. Or actually, this is Thursday. This is Wednesday. I need to go all the way over here. Hello. So because of the no, I can actually see it. Wow, that's surprising. Okay. So on this, we saw this would have been key level hit here. And we've already determined that the break of structure happened roughly at this here. This was at the 10:50-ish mark. Oh, no, it happened before, because we broke structure at the low here. So yeah, 5 minutes, roughly. In this, we broke structure on the 5 minute, breaking past this low here and this low here. From that break of structure, we would need to look for a fair value gap. That fair value gap happened roughly in this here, because it moved down, right? This was around 10:55-ish that occurred. That would have been after we needed to be out of market. From that fair value gap down, we would have looked for an inverse fair value gap on the 1 minute. We had a fair value gap here. It didn't get inverted till right about here. We would have needed to look for a break of structure. So from this downtrend, we would have needed to look for a break above the high, which would have been this candle here. Our entry, if we had taken a trade Wednesday, would have been on this candle here. And we would have sat for a long time in floating profit. We would have entered there. We'd have seen it come all the way up to this, right? We'd have seen this happen. We'd have seen this consolidation and been concerned the entire time. I don't think I would have waited through this. I think I would have ended like roughly in this right here. And probably, if I had to guess, I'd have come back down and taken half the profit I would have had. Because I know this consolidation is it mopping up liquidity from a previous price point. So I'm going to guess this like little mini retrace right here. Breaker block, if I have to guess. It mopped up that. And then from that, we saw almost aligned highs throughout this, which told me it was sweeping up liquidity. And from that, we would have waited for that push higher, right? And a break of structure back to the downside. And by this time, we would have been in worse. We would have been in a worse situation than we already were, because from this point right here on down, that's like half this leg up. Problem. Because as soon as this broke structure, we got a mini retrace breaker block and it plunged through the floor. We would have lost a lot of money had we taken this trade. So I elected to say, okay, this is bad. This is bad price action. We know price is about to go down. My bias was that it was going to go higher. Problem. Realistically speaking, we knew it was going to go lower because of the general trend, but because of the way it broke out of structure on the daily, we thought it was going to go higher. It did go higher. The idea was correct. We would have been stopped out and we would have lost more money than we were going to gain out of it, though. We would have been. And realistically speaking, that was me observing this key level here getting hit, right? The entire time after 8 a.m. opened up, we were looking for one of these key levels to get hit here, and there were no other key levels Wednesday that we saw that said and screamed out to us, hey, we're about to get hit, you might want to take a trade here, right? There was no key level in this that was hit. We were looking for all of it, right? I mean, sure, I could have hit that. Sure, I could have marked this. Sure, I could have, I don't know, we could have come up to here, looked at this breaker block and said, oh, it's going to clear this right here and then it'll book it back down. We didn't mark it because I was too convinced, I was too concerned with seeing a line crossed from London session high and low. Because typically that's what happens. A key level gets hit on the London session and then we see a barrel down, or down low and then barrels up, which is cool, right? It is entirely cool for this to have happened. I'm glad we didn't take a trade, because if we had, I would have lost money. I'm convinced I would have. I'm pretty sure I said at the end of that video, I need to get better at identifying daily bias and ensuring that when I have identified it, I can accurately predict where prices are going to go based on the information that was displayed to me earlier in the day. I think I did the best that I could here. I sat on my hands and I waited as patiently as I could for price to go above a key level. I did not do that wrong. I know for a fact I didn't. But at the same time, I couldn't predict where price was going to go based on what I had. And there was no way I could have predicted this here outside of the general trend movement, right? So from that, I'm going to pat myself on the back. I didn't lose $10,000 on a single trade because I was stupid enough to think, oh, this is definitely going higher. I'm going to pat myself on the back now. Yay. Thursday, I did not wake up at all. I slept through all of this. If we were to set this up right now, ouch. Because again, we are still in the straight line. We have not moved out of this straight line. This straight line was awful when I woke up. When I woke up, it was roughly in this right here. I saw this leg up. I'm like, huh, okay, so it's incredibly choppy right now. Bad idea to take a trade. Bad idea if I had woke up early to take this trade. We had 3 red folders, an orange folder, and something else Thursday, and it stopped everything. It stopped all the motion that this had. It was all stop. I want to do this. I want to look, because we have very hard to see because this right here is the thing. Let's go all the way down to here. What is this price range right here? Why am I marking this? This is the high and low of past. This is Thursday, high and low. The highest point outside of current price action for the day. All right. What is this consolidation doing? Why is this like this? Right? What's going on here? Well, we had a breakout, breaker block, order block. It came down. It looks like it swept a little bit on this daily time frame and jotted higher, right? Which is cool. This is what we were looking for over here. Why am I looking at this? Why is it important? Building blocks. My understanding is TJR has it to where you can apply building blocks to every single time frame and it work out the same way. So I'm looking at it. I'm determining for myself, what exactly am I looking at here? I'm looking at a consolidation period. Usually consolidation means it's mopping up an imbalance in the market. Breaker blocks are like fair value gaps, the way TJR explained it, where they're imbalances that can either be respected or disrespected. But breaker blocks are also signs of continuation. So, if this is a valid breaker block, this leg down, this leg up, failed retrace, right? If this failed retrace is in fact a breaker block, right, which makes sense because it did continue higher, much higher into this right here, right? Breaker blocks cannot have a wick below their price action. They are unlike fair value gaps in that respect. Breaker blocks, you have to count the wick as well. So, wicks can't go below the lowest low, and wicks can't go above the highest high. If it continues up above the high, then guess what? It's going higher. If it breaks below the low, it's going to go lower. Disrespected breaker block is the same thing as saying a disrespected fair value gap. If a wick goes below it, though, it is 100% going to continue lower. Okay? Okay. Same story on the upside. If it's respected, right? There's nothing that hits below it, and we know that this breaker block here has been respected based on this price action, it's going higher without question. The most recent low outside of our lovely price action for today, so I'm going to put it back here so we can actually get a good picture. This low here has not disrespected this breaker block. So we're going to treat it as such. Because it hasn't disrespected it, my daily bias outside of this leg down and the general trend being technically right now a downtrend because we haven't had a break of structure past high, I think price is going to want to go higher. I think price has shown that it has swept up this liquidity now for 2 days. And as a result, our current line of thinking should be look for a break of structure out of this, right? Or a liquidity sweep, right? So it'll hit this. And from that, it's not 80 yet, so we can't count this. But I can do this because this right here is now a thing. This is pre-market for New York Stock Exchange, just an FYI. What we're looking for is a liquidity sweep off the lows, and I believe that's what we just got. Liquidity sweep from here, and this would have been a valid order block, liquidity sweep. From the liquidity sweep, we'd have been looking for a price to move much higher. And again, we're waiting on this fair value gap here. This is now an inverse fair value gap, so our price is going lower. We don't care about this one. We don't care about this one. Actually, no, we'll keep this one up because this is a valid fair value gap at the moment. This right here, yeah. This was leg up, completely balanced. Yeah, I'm not seeing. Yeah, I'm not seeing a. Well, no. This could be there. There was a mini retrace within this here. So I believe on the 5 minute, I could be wrong. We had a leg up into this, and there's like a line of green in this that we can't see on the hourly, but I'm pretty sure there's like a line up. This would have been a breaker block that this filled, and it almost fills that entire price range completely from the bottom of this wick to the top of this. So I don't think I want to care about this because we had wick above and below it, right? Which says price doesn't know what it wants to do, but it was in fact disrespected. So with that being the case, we can't consider this a valid fair value gap. We know that it was disrespected on a downtrend both ways. So price doesn't know what it wants to do. We have a consolidation. So now we're looking at current price action. Current price action says, based on this consolidation, that it's filled a breaker block. We're looking for a miniature leg, a miniature break of structure, which is what we got here, right? Though it's within structure, we haven't really broke structure. This is an uptrend. I'm talking about the general consolidation, right? We want a breakout trend where it breaks out of this consolidation, and from that we get a liquidity sweep, a key level hit, or we have a general reason to think and know, oh, price is going higher, because ultimately price is going to want to go higher. That being said, I'm going to pause the video real quick. I will be right back to light up the room like nobody else, and then I might actually get breakfast. Am I looking to take a trade today? Yes. Yes, I am. Does it look like I'm going to get to take a trade today? TBD. Comment section. TBD. I'll be right back. Gotten a little bit back up in price. For the day, we're in a downtrend. That's easy to identify. Our London or Asian session, we had no fair value gaps, no imbalances. Price continually went down. At the end of that, we had a fake out on London where price did a jump up high, almost broke structure, and we are now looking at the plunge, the fakeness of London sessions price action. With that being the case, we're also in New York Stock Exchange's pre-market. So we're looking right now at that continual down, but the pre-open to New York stock. With that being the case, 8 o'clock comes around the corner. I am expecting at the moment for price to actually jump up above that wick that was just formed off of this current candle that's moving down. Because we have an inverse value gap, this says price is going to continue down, but because we're also in consolidation, right? We haven't broke past this. So what I'm thinking is going to happen on New York session, within these two candles, we're going to see price action jump high. We're going to see it clip past this, and that is going to give this room to be deemed as a order block, right? Because it completely covers from here to here. It wicks down into this. We have London session low. Cool. We want to see it hit this. We want to see New York stock hit this key level specifically. This key level is going to tell us, okay, once it's hit, liquidity sweep, because this is liquidity sitting up here. It's going to wick past this and barrel back down. We want to see it continue down from this sweep, which means we'll need to be looking on the 5-minute for a break of structure to the downside. We'll need it to look for an inverse value gap, because this is going to shoot way high within this time frame here. When it shoots high up above and hits this key level, that's what we're going to be looking for, right? We're going to look for that. We're also going to be looking for SMT divergences. I need to do... Holy crap, I need to do this. I'm going to clear all of that because there are so many lines on that chart. It is crazy. Eight. Good. We don't care about that low because it was just passed. Good. Good. Yeah, there's no... I don't even know, like, how that works. So it's... Huh. Hot dog. Pardon me, was... I am multitasking. Not was multitasking, I am multitasking. I am very much so multitasking. Anyway. I'm gonna mark the same thing here. Most recent high out of the day and most recent low out of the day. Boom. This gives me a more accurate price range to look at. We wouldn't be able to see SMT divergences on this one just because it is such a large range to cover. But at the same time, we should be able to see something. So we have a mini one right here. These two right here are SMT divergence. NASDAQ says lower. That's what this huge leg down is. This indicated this. This SMT divergence said, okay, confirmed reversal. We're moving further down from this break of structure to the high, sweepage of this high on Asian session. From that, we got SMT divergence saying it's going to go lower off of break, shoot down, clear this low. It swept this low, but it didn't close below. So from that, we got... Dang, that was fast. Okay. From that, we got sweepage of low and inverse on this fair value gap here. The said price is going to continue on down. That being said, what do I think is going to happen? I think it's going to continue lower based on this SMT divergence here. We saw it continue low. This is soon to follow. This candle pretty much matches this candle here, which that makes sense. It lines up. There's not much to say about that. That was the only S&T divergence, and that was on the hourly. That said, price is going to continue lower. We got the move we wanted to off the S&T, which is gold in my opinion. However, now we need to wait from 8 to 9. We need to figure out where this is going to go. We want it to hit this key level again. We, realistically speaking, want it to hit this key level here. Because we know if it sweeps this high here, one, not only will we be able to see an SMT divergence somewhere in this, but we'll also know that this high was swept from this sweep of high. We'll have seen, realistically speaking, is that not higher? This is higher than this. This did not sweep this high. This swept this high. We want it to come back up, clear this high here. And from it, we want to see all the building blocks saying, yes, price is going to continue on barreling down. That's how we're going to get the best trade out of this. News currently, big old meh. Red folder on GBP, orange folder on USD. If actual is greater than forecast, it's good for currency. If this is green, price is continuing lower, which is good for us. That tells us that our idea is right, right? Whoa. Interesting stuff. Interesting. I don't know if you guys can tell or not, but my throat says no to everything right now. I'm going to pause the video. I'm going to wait till one of our key levels is hit outside of London session. With that being the case, I will be right back. Okay, so we have a breakout of trend. This huge leg down here. We were all the way up into this. We saw a break structure on this here. It came back up for a little while, and in the past 10, 15 minutes, something like that, broke way past. This is the breakout we've been looking for. This breakout says price is going to continue down. And then this right here has had enough time to clean up the fair value gap imbalance here, as well as claim all the liquidity right here under these lows. From here, it's actually going to target on down, I imagine, towards this here. So we could be seeing targets of here, down there, even in this little line here. It could also be targeting this gap here for the month change. I believe this is what? That's May. So May, that's 7th. So it could be targeting that gap there, if I'm not mistaken. Aside from that, I mean, there's not really much else to say at the moment. Aside from 8 just hit. It is now 8:10. I need to get on Trade Locker and set that crap up because we're needing to take a trade on that as well. Good. 5 minutes. This. 950. Boom. 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 Good. Here, we're going to go up to the hour. We hunt down this. Technically, there is a key level hit. I mean, we had a low here. This was London session low. New York session just opened up. And from that, we had a hit of key level there. Going down, that's the continuation sign. We move on to this. On the 5 minute, what exactly are we looking for? We're looking for either a break of structure or inverse fair value gap. Right now, we're not seeing that because 1, we're in a downtrend. 2, this is the breakout of said consolidation trend. We're looking for price to come back up, break of structure, hit this here, or inverse fair value gap. We'll have a fair value gap form, a low here, fair value gap right here. We'll look for price to come back up from that back up, right? We'll see the inverse fair value gap. Do we have an S&T divergence at all? That would be something interesting to look at. Not there, not there. So we're looking for break of structure, inverse fair value gap off of the current move. That's what we're waiting on. Once we see and identify that, on the 5 minute, we got to look for our breaker block, order block, fair value gap, or for just generally price to come up between this high here, this low here, within equilibrium. Once it comes up within that certain range, from there, we'll be looking for price to come back down and continue in its down motion. That'll confirm that the continuation is valid. It's still going to continue down. Confirmation that that was valid is going to be in the form of a break of structure, or an inverse fair value gap back to the downside. And we're going to be looking at that roughly within this to this range. We're not looking for it to go higher. If it goes higher, we'll know that that specific sign of continuation says, yes, price is going higher, not lower. That's pretty much how that works. And it'll probably violate this fair value gap here, creating a double inverse. This will have been canceled out, and we'll see it continue higher from there. That being the case, that being said, I'm going to continue setting up on Trade Locker because this is the platform we are actually going to be taking live trades from. And I do not want to be left behind when it comes to actual money. Like, I'm being absolutely serious about this. I want to make the most I can for as long as I can off of this. Don't care about that because it is past. No. This. Yep. Mm-hmm. We're going to take this, remove it down there. Oh, I've already marked it. Oops. Go away. Thank you. Beta key level there, get hit. We're on the 5-minute there. We're looking for break of structure or inverse value gap or SMT divergence for that. SMT divergence is going to be one of those late discovery things because I am not seeing. Yeah. Break of structure and downtrend is when the previous high is closed above, so that's what we're waiting on the 5-minute. Inverse value gap has not been presented yet. I'm looking at the live data trend. We've currently consolidated on the key level. We're waiting for that move back up. All right, I'm gonna pause until the next building block presents itself. I'm gonna be very, very careful with my unpausing, so that way, one, the video is as short as possible, and two, you get the most out of it. With any luck, we are probably going to be taking a trade today, just because we have a breakout of that consolidation, and I'd like to see it continue on downward. General daily bias is that trend is going to continue down based on solely the break of structure out of the consolidation. That could be a mistake. That could be wrong. We will know here in due time. It looks like we're about to have a break of structure on the 5-minute to the upside, right? We're going to have a high closed above. We're looking at it. I was going to pause, but it looks like it's about to happen. We got 2 minutes for that candle to close. Waiting patiently for it. I hope you guys are enjoying the music. I know I am. I'm not able to hear it like you guys can, but it works. It works. That was weird. Anyway, we have not had a breaker structure yet. Yeah, I'm gonna just pause it and just wait. I will be right back momentarily. Okay, so on the and shoot, that looks like SMT divergence to me. Does it not to you guys? So we have a high here, right? Up, down, boom. It goes up to that. It's a small one, but it's still there, right? Boom. Same here. It goes down a little bit to that on the NASDAQ. That says price is going to continue lower. Though it's now doing the reverse on the live view of things. I'm looking at price continuing higher. We have break of structure. Break of structure and on closure inverse for value gap. From here, we need to stay on 5-minute. Look for breaker block, order block, price to come back up within equilibrium. I want to do this. I want to do this. Fib. I'm going to take price within most recent high down to the most recent low. That is enormous, and that is not the tool I'm after. What the heck is this thing? That was weird. Very weird. Very strange. Was not expecting that. So I don't need to be doing that. What I'm going to do is this, though. From this low here on up to this high here. Most recent high. That. Well, actually, no. Equilibrium would be in this price range because it'd be the most recent high, the most recent low, right? Makes the most sense to me. I mean, shoot. This range and continue on down. Okay. I think we had a breaker block form on the 5-minute. I think it was this right here because it closed, but it didn't close below the opening of the previous candle, and the wick was far below it. So now we're looking at a breaker block showing signs that price is going to continue moving higher. And because we had price move above this wick, disrespecting this side of the order breaker block specifically, and the most recent low, this candle here, did not disrespect this low, we're seeing price continue higher. That is what gave us the break of structure and the inverse for value gap. Wait, yeah, inverse for value gap because price shoots all the way up to here, past this point. it covers this entire fair value gap there between these three candles specifically, right? Gap here. It closes up above that. Boom. From that onward, we'd be looking for SMT divergence or because that was break construction. Now we'd be moving on to equilibrium and breaker block or order block. Breaker block was here. We'd be looking for that to be an order block. If that's an order block, that means that retrace up is a fake out is actually going to come plunging back down and break past this low here. Equilibrium. Can't do that. We're not within. No. 30 minutes is almost up for this, so the next 30 minutes is about to begin. We need to stay on the 5 minute. This is where things get a little confusing for me. A little bit more difficult. Because if this candle closes, we'll have a fair value gap form, which is cool. It says price is going to continue higher. We want it to continue lower, not higher. We had a breakout of the consolidation here. This was the breakout that we wanted. And slow down here. It could be gearing up for a new move up. I think I'm incorrectly using this, so what I'm going to do is I'm going to rely on the other three. Because I know for a fact that that is not how you use equilibrium. It's based off the most recent high and the most recent low, so it would be within this right here. That'd be using equilibrium. But the problem is, the way I was using it, it would not make sense because this candle specifically shoots all the way above this. Trying to take a trade. We have a fair value gap form off of this candle here. I don't know if I can count that though. because it's what results in the inverse fair value gap on the on this right here, right? This candle gave us the break of structure. I don't think it can give us the fair value gap on the same time. At the same time, I think because this candle targeted more so this and these two here, we got the inverse fair value gap and breaker structure at the same time on the one candle. I'm not going to attribute the fair value gap on the 5 minute on this. Instead, I'd rather wait for further candles to determine whether or not that is an accurate gist or not. Crazy buddy. I'm going to pause the video. I'm going to wait for something to form, something that's easily identifiable. Once it has formed, I will unpause the video and I will share with you my findings and where we go from there. BRB. Okay, so on the live trading view of it all, I believe we just found ourselves a breaker block, failed retrace, right? We're looking for that to occur. That notion, I think it's best if I head down to the 1 minute from here. We're looking for an inverse fair value gap on that note. I see a fair value gap right there. I'm looking for an inverse. This will result in me pressing sell. We got a break of structure, consolidated per the lineup on this notion right here, right? We watched it continue on. We were watching price break back down. This was a failed retrace to go up. Hi, buddy. How you doing? I heard you crying. You got a biscuit or a hash brown? Yeah. Can you grab that? Thank you. Floors are very clean. We're good. We're just waiting for that fair value gap to be inversed is all. We need a closure below it in order for us to press sell. The general trend is down, so that's what we're looking for. Before we go crazy and do that, let's go ahead and do this real quick because I also want to see something. This was our key level hit on this candlestick here. It didn't hit any low. It didn't hit a low. Break of structure or inverse value gap. So we had there, we did not break structure within any of that. We did not get the breaker block until after that formed. So from that, we have this move specifically. This is going to result in that moving down. I want to see that closed below before I press sell. When I press sell, my stop loss is going to be above this here. Yeah, it'll be above that there, and then from that, we'll see it continue on down. All right, we have that. We have 22 seconds for that to close. I want to see it close before I do anything crazy. We see price and we want it to move down. It is in the downtrend. That is a breaker block without question. All right, that closed and gave us an inverse or value gap. I'm pressing sell. The idea is that this is in a downtrend and we want to see it continue on down. We're going to open up the trades tab, do this. We're going to edit that. We're also going to press sell on this right quick. That's a thing. Boom. Good. My stop loss is going to stop right here. Modify. Boom. My take profit. We have not set that margin at all. I like my take profit roughly in this here. Is this a good trade? Not really, but at the same time, we see it for what it is. We know price is wanting to continue on down. Otherwise, this fair value gap here would not be a thing. On the 4-hour, we got a fair value gap. On the daily, we got a fair value gap, and that is a stark jump down currently. It is inverting that currently on the daily. So everything is saying yes, price is continuing down. The bias is correct in my opinion. Based on previous price action, price is going down. It's all going down. Da, 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 you get the point. You better dance. Let me grab my stop loss on this. We're gonna move that. I'm gonna get a little extravagant here on Trade Locker. Confirm. Boom. That looks a little bit larger than anticipated, but that's okay. I'm going to do this here. I put my stop loss on this here. Boom. On the top of that. Yes. I put my take profit from the hourly. Where's Monday? This was Monday. I took my take profit and I put it down to this here. Is this a good trade? No. No, it's not. This is not a good trade at all. Why? Because it is a near 50-50. Completely near 50-50. This is a breakout of structure here. 1. 2, every time, for every action, there's an equal and opposite reaction. We consolidated here and continued down. One thing tells me price is going to go higher, and that is because we have sat on this line for so long, right? And it's only just recently that, and it's not on news, that we broke out of this, which means we're going to see a strong reaction off of this. My concern is that the idea that my overall bias is wrong, that the trade is going down, or it's going up instead of down. Per this, we had a break of structure as per usual. We also had the fair value gap form, inverse fair value gap, right? It did invert it. It stopped the motion upward. Everything about the higher time frames says price is going to continue on down. Price continuing down is what we're going to make money off of. That is the idea. That is the hope. That is the gist of it. We are having breaks of structure on down, less breaks of structure because we haven't closed above a high outside of the leg up here. This is consolidated and we have continued on in our downtrend on down. We are currently entered in on a trade. It is 9:01. Live trading says we have confirmed inverse or value gap. We want to see it continue on down. With that being the case, yeah. Later on in the day, later on this weekend, I'll probably make another video, so stay tuned for that. It'll probably go into detail. It will go into detail. It won't probably. It will go into detail everything I did this video because I think I identify things relatively well. I don't think I rushed any of it. I don't think we really messed anything up. Okay, that didn't hurt. Good. It was modified. Okay, sure. Boom. Oh, I forgot to press confirm on the take profit, I think. Yep, I forgot to press confirm. That was my mistake. Oops. Any case, I'm looking at this here. Do we have any SMT divergences? We do, right there. S&P says higher. NASDAQ says lower, a lot lower. This S&T divergence is indicative that this is going to continue down, and as a result, this is going to follow suit, strongly speaking. So now we're just waiting for that to happen. My first, and you know what, let's go ahead and do that right now, because I am very, very, very aware and concerned on that. This is where we entered. This is where price meets action over here. Boom. I think we need to look at this draw on liquidity here, because that is a well-defined low that it could target. We have a gap here that we have to pay attention to. We have a target here we can hunt down. Boom. We have a target here we can hunt down. This one here. We have a target we can hunt down right here. The next most recent low is the take profit for this here. Reset chart view. We have our take profits listed on that. Well defined. We have not broke structure yet on that. We entered on the inverse for value gap is what we did. On the close of the inverse for value gap, so we know it's going lower. On the 5 minute, it's a little more well defined. We have fair value gap here, and we have a leg down here. We pressed sell on this candle here, though it didn't quite close this fair value gap. We do see legs continuing on down. We want to see the next candle close below that fair value gap, which is going to confirm to us our hypothesis that yes, price is going to continue lower, and from that we should see a leg back down in the same fashion we saw up here. We're looking for that sign of continuation on down. On the 5 minute, I think our bail mode, our option to bail specifically, one, I think the stop loss is a little too high. So what I'm going to do is I'm going to bring it back down here. This is what I'm going to do to sweeten the deal, because right now, we have managed to okay, cool. So we've managed to identify pretty much everything we need to in order to solidify this trade that it is valid, with the exception of the last confluence being a fair value gap, inverse fair value gap, right? We're looking at right now not a break. No. Yeah. It would have been a break of structure before inverse fair value gap. So we entered on the break of structure. I'm sorry, for the 5 minute, right? On the 1 minute, it would have been still considered a break of structure because in an uptrend, right? Because this resulted, right? We broke above this. We were in an uptrend for this duration. It wouldn't have been until down up this low here got closed below, which would have happened on this candle here, that we would have entered on that sell. we entered. And from that, we're looking for it to continue on down. I do not think price is going to come back up into here because of every confluence we've managed to identify within this. We identified that this right here was a breaker block, that this right here was our sign of continuation. It failed to retrace back up and continue this uptrend off of this candle here. As a result, we're looking at price barrel on back down. Based on the break of structure. Do we have any S&T divergence as of right now? NASDAQ says down. Everything is pointing down. That works. We'll do the same thing with the stop loss on Trade Locker, so I'm not losing too much. Let's go ahead. Adjust that. Boom. Edit. Take this. Bring you down. I'm putting it specifically at the top of that fair value gap because I am not wanting to lose too much off of it. That's right above equilibrium, and I don't think spread's going to get that high. Good, good. Take profits the same. I'm not moving it. I'll leave that right where it is. I'm going to let that sit for a minute, do its thing. Boom. We're going to watch that very carefully all the way around. My hope, my goal, my gist, my thought process is on the 5 minute specifically. If we see a break of structure back to the upside, I believe our trade idea is incorrect. It was invalidated based on that break of structure back to the upside. And now going forward to understand and look for a liquidity sweep. So that would be the re-entry on this key level specifically, because again, this is the current low per London session, right? It would need to be a re-entry onto this and a sweep to continue higher, which I think is what's happening, which is unfortunate. Everything's pointing down though. Every single thing about this is pointing down. The trade idea is a strong one. I have a strong idea that this is going to continue down. Patience and time. That is what's happening now. Patience and time. I'm going to pause the video now. We've entered in on a trade. Right now we're negative. We're in the red, but that's okay. We're simply waiting. We want to see it do its thing. Continue on down. I'm going to leave this chart where you guys can see it right there. We should see it continue on down throughout this. Hopefully by the time I unpause, it will be well below this. This little where it stops right there, right? It'll be a red line back down. It might consolidate a little bit and then go. I don't know. We'll see. That's our hope. That being said, we'll be right back in due time. What's up? So far, trade idea is incorrect. So far. Let's figure out what we did here. I may have rushed it. That's a me thing. I might have actually rushed it. I may have been too fast. I may have been impatient. Was I impatient? Probably. What did we do? We saw this leg down and moved our London session low down with it, right? We waited for the 8 o'clock candle to open. No biggie. We assumed, based off this fair value gap and the fact that we broke out of a consolidation, price would continue down. I mean, the general trend at the moment is down. We are in a downtrend. We have not made a new high yet, but that could change. What was my potential mistake? Well, we saw this key level get hit first, and from there we went down 5 minutes. Let's go to 5 minute and just look. Here is our fair value gap on the higher time frame. This was the leg down out of the consolidation, right? From here, from this key level hit here, we move forward. What were we looking for? We were looking for a break of structure. We were looking for an inverse fair value gap. We were looking for an SMT divergence. We didn't get the SMT divergence. At least, not to my knowledge, we didn't get an SMT divergence. We were clicking back and forth, looking. No SMT divergence. Not even on the upside in SMT. We didn't get a single one. So from there, what were we looking for? Inverse fair value gap, break of structure. From this point this way, we got a break of structure. How is it a break of structure? Up, down, high, boom, broke past. Closed above that high, and so we assumed uptrend. Okay. This break of structure from this leg down, yes, that makes sense. It's supposed to be an uptrend. That's cool. What we were hoping for is a continuation sign back down. That price would continue on down. From this way, on the 5 minute, we would have been looking for a fair value gap, breaker block, order block, or equilibrium. My thought process was, because we had a break of structure on this, we cannot allot a fair value gap to this candle. So we waited for further confirmation, which we got between these 4 candles. These 4 candles, in my opinion, were the breaker block. The breaker block was a sign of continuation. I believe I found my mistake. So, breaker blocks are signs of continuation in the direction market is currently moving in. There it be. There's my mistake, guys. Did you catch that? I think I caught it. I caught it. The general trend is still down, though. So what were we looking for? We were looking for a sign of continuation. The price was going to go down. How was price going to go back down in this retrospect? Well, breaker block says price is going to go higher. That's cool. We know price is going to go higher, but we also know, per the higher time frames, news, and everything else beforehand, price is going to go lower. Because this is not a new high. This is, sure, off of this high, potentially new. But, strong but, we have a massive fair value gap here, and it's only got that high up into it. This fair value gap is still being respected, and this is not a news fair value gap. This is a market established fair value gap. So, if this were a breaker block and we continued onward, we'd be looking for a break of structure or an inverse fair value gap on the 1 minute. And on the 1 minute, we waited. Waited until we got, boom, break of structure on that candle there. We had a low, broke below. We had a low, broke below, right? From this, we entered on the very next candle opening, thinking price was going to continue down. It did. It continued down. Very, very little. Very, very little it continued down. We're looking for another leg like this one, back down. Which makes sense. I mean, this is the trade idea. Price is going to continue down. The mistake I think I may have spotted earlier was the identification of the breaker block. Breaker blocks are continuation confluences that say price is going to continue in the direction of the break of structure. Previously mentioned, we're out there, right? We broke structure to the upside. We had a breaker block that said it was going to go higher. Price has gone higher. That was my mistake. Now we're kind of paying the price for it because it's gone higher. Everything up to this point, though, and even still, like this fair value gap, it's completely like I have to zoom all like where's the hourly? Come here, hourly. Yeah, you. Boom. Dead threat there. Right at where we entered. Our thought process was because it had gone all the way down here, it could target this, it could target this, or even if we were lucky, some of these down here, which makes sense to me. It made sense to me. And there's still a potential that that could happen. Right now, we are in a downtrend. For this past week, we have been in a downtrend. And as a result, I have been consistently thinking down the entire way. What's telling me it's going to go down? This fair value gap. This fair value gap right here tells me it's going to go down. I want to adjust this. I want to bring it above the fair value gap because if this comes up, it's going to target this high first, and I don't want it to stop us out. I understand bringing this up, one, kind of messes with the trade idea because it says, oh, I think it's going to go down and it's not going to do this. This saves me the most money on this trade specifically. That is the accurate thing to say. And to change it to a higher position is a problem because if I do that, I'd be admitting that one, my trade idea is wrong, and two, I'd be willing to accept more of a risk I'm not wanting to take. Problem. I had a good idea. It worked up until I made a boo-boo in identifying a breaker block. I know the definition of a breaker block. My problem is identifying it on a chart when it presents itself. Breaker blocks are failed retraces within the market. I think I need to do this. They either move up prior to the break of structure towards the reverse in trend shift. They are before the break of structure, or down prior to the break of structure in trend shift. These are not to be confused with order blocks. They are the leg down before break of structure and liquidity sweep caused by order block. Okay. Both breaker blocks and order blocks are typically found in the same price range. It's best to identify an order block first, then move backward to identify a breaker block. For the order block can be price that broke structure, and the breaker block will be the retrace from just before the move, which will cause the liquidity sweep. So that's the case, it would have been this right here. This would have been the breaker block. This would have been the order block that caused this sweep of liquidity here, this high. As a result, we see price moves higher. Does that make sense? Makes sense to me. I think we're going to get stopped out. Don't want to exit the market right now. I think I want to sit and wait on this because, again, we have a fair value gap. Fair value gaps are signs of continuation. What after identifying a fair value gap is best to go down? Break of structure or inverse fair value gap on a 1 minute. Problem. If we attempt to move, that would be accepting a greater risk, one, and then two, we'd have to wait for it to come all the way up, close above this, or break above this. And if the placement of this is wrong, I'm not affected by this, but I'm affected by this spread. I'm affected by this spread. And the difference between these two is kind of big. So, with that being the case, I kind of don't want to move this. I kind of don't. I'm aware of what I'd be doing if I were to. I'm aware that it'd be wrong if I did so. This sucks because I thought the idea was right. I thought I had the right idea. I thought I had a good idea. I am wrong. As a result, we are now negative $5,000. Almost, yeah, we're that. We're down 6, dangling around 5. I am learning. That is what I'm doing. I am learning. I am so tired of losing trades. I am learning. I think this is the second time I've made this mistake. Second time this week, I do mean. One, I was impatient. I straight up saw this and jumped to the 5-minute and called it there, right? And in actuality, I should have waited for this right here. I should have actually looked at this, known what was happening. And then from here, because it would have come back down into equilibrium, right? From this high to this low, it came back down. Respected the fair value gap and continued higher. I should have seen this and went, oh, buy here instead of sell here. This was the incorrect move. As a result, big ouch. And we've seen a couple of dips, like each one of these right here. We've seen a couple of dips saying, yes, it'll continue lower. We're waiting for it to continue lower. Every time we get a dip, it disrespects the fair value gap, inverts it. We're going to go lower. Yay. Idea was kind of right. Then it gets inverted immediately after. I'm like, oh. Market manipulators are actually going to town right now. I want to wait. I want to wait and see. Right now, the fair value gap's being respected. Higher time frames hold higher confluences. Right now, the fair value gap's being respected. It is one big fair value gap, too. This was in London session. Market has all the power and room in the world to continue on lower. And it can continue lower. By a lot. I'm gonna go ahead and pause the video. You'll know if we lose. So my trade idea was completely wrong. Hey, stop munching on the cords. Come here. Why are you munching on the cords, huh? Huh? Tell him, say meow. Tell him. Tell him, say meow. He ain't supposed to be munching on the cords. No munching on cords. No, no. It's unfortunate, but the trade idea was wrong. We went all the way up. We haven't been stopped out yet, but I have lost faith in this trade. Everything was and made sense. It didn't work out. We lost more money. There you go. Stay over there. You're on a bed. Chill. Look, lay down. Lay down. No. No bite, no play. Lay down. Chill for a second. No, chill. 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 Chill out. No. Chill. You're a playful kitty and I love you. Okay? Yeah. You're playful and I love you, but you need to chill. I'm trying to work here. She's fine. She's not hurt. I threw her on a bed. She landed on a pillow. It was softer than she is. But yeah, I'm looking at what we got going on, and we failed today's trade. Not fun. Not fun at all. If you enjoyed today's video, give it a thumbs up. Comment, like, share, subscribe if you're new on the comeback. And if you're experienced, let me know in the comments what exactly, I mean, I think I did a good job at identifying the mistake I made here. Though it was incredibly late and I wasn't smart enough to wait or reevaluate what I did up until the point. I could have caught myself, but I didn't, and I made a mistake as a result. Price is only going higher. There's a lot I've still got to learn. We have next week to get back all of this and go into the green. We really need a good week next week. I really need one. I'm going to be very, very tired all 5 days. It's got to be done, though. We were just stopped out on live. I'm going to go ahead and exit trade now on both. It's unfortunate, but we lost more money. We're now negative $6,718.91 in the red. That's not where I want to be. I need to get better at this. I need to get a lot better. If I had found that mistake, if I figured this out, if I had said, oh, it's a break of structure, end of trend, continuation higher, we could have made everything from here all the way up to here. And that would have been an almost $2,000 profit from here to there, according to what we just lost. I'll see you guys in the next one.